A mutual fund returned 93% in a year. Since launch, its annualized return is around 24%. That fund is Fidelity Global Innovators. Some people think it's a miracle, some people think it's a scam, and I feel there will be a better question to ask. What made this return even possible? The fact is, Global Innovators did not win in a normal, evenly spread market. The market became very concentrated in the past year. A small number of companies capture a huge amount of value. Big tech, AI, chip companies. Reports show Max 7 represent roughly 1/3 of US market value. A fund like this with amazing performance is because it's already standing where the money was being made. The return is real, but let's separate a few things: market structure, manager skill, and timing. If we mix them all together, we are learning the wrong investment lesson. The fund manager, Mark Schmehl, matters a lot here. With this fund, you're actually buying a manager's way of reading change. We all know he invests in innovation, but the real part is that the fund is willing to look different from the market. That is where active management can have a value. But if an active fund charges extra active fees, but behave almost like the index, then it probably does not worth it. Global Innovator is different because it can move across sectors and lean into areas where the market is underestimating future earnings. Mark is now trying to predict GDP, inflation, or the next central bank move. His focus is more industry and company level. Where is demand improving? Where is product market fit becoming clear? Where is the market too slow to understand the earnings power? A lot of people is saying AI is the future. And the harder part is finding out who actually benefits. Does the company deserve capital? Does it can actually turn adoption into cash flow? Is it the market still mispricing that change? And that is where active judgment matters. But still, judgment is judgment, and strength can be risky sometimes too. In recent years, there are lots of active fund debates, but let's see some data first. In 2025, more than 85% of active Canadian funds underperformed their benchmarks. If it's for longer periods, only a few strategies survive and beat their passive peers. So an exception like these funds deserve attention. And when we are looking at this, we should think about what is this fund's edge? How is it different? And what market environment can help it win? If we don't ever bother thinking about those questions, we are probably just reacting by the numbers and not investing. Sometimes the real risk is buying it only after the story becomes obvious. This happens all the time. A fund performs well, everyone starts talking about it, feeling confident, and thinking gets weak. Of course, AI innovation still matters. Great companies will compound. But once everyone already bets the story, future returns will be uncertain. They need earnings to catch up. They need the next set of winners. People maybe are not late to those popular names, but will be late to the original insight. For investors, this fund has a real lesson. Global Innovators can make sense as a growth sleeve. It gives exposure to a more aggressive part of the market, with a manager who has shown real skill. But if your whole plan depends on one fund, one style, and one market cycle continuing forever, then you are taking a bet. Before buying any stocks or funds, I would ask 3 questions. What role does it play in my portfolio? What is this investment betting on? If it dropped 20%, would I still keep it? So to close, Fidelity Global Innovators is a strong fund. The performance is real. The fund manager made good active calls. It also benefits from a market that rewarded a small group of growth companies. A lot of the time, people lose money because they enter a good story too late. They buy the result and confidence after the market has already rewarded the insight. So if you look at a fund, don't just ask whether it's a good or bad. Ask what part of the future it is trying to own. Ask whether the edge is still there. Ask if it fits your portfolio instead of becoming your entire portfolio. Because a great fund is still just a tool. You can always find a strong product. But the hard part is staying clear-headed when everyone already agrees it is strong. Thank you for watching.